So you've done all the hard work. You've done your hard time frame, your medium time frame, your whole multi-time frame analysis. You've identified your high probability POI. You've got to your market on time. You've been patient. You've waited for your medium time frame to be mitigated. Your alert's gone off. You've been even more patient, and you've waited for your textbook entry model to occur. You've set your limit order. Price hasn't tagged you in. The question becomes, at what point do you think about canceling your order? Okay. Now, there isn't any real easy answer to this, but sort of the two main mechanical methods or sort of scenarios in which pretty much I typically consider cancelling an order is when either price has to break significant structure to get back to your entry, or price has mitigated your medium time frame or higher time frame key level, whether it's broken some key structure or it's mitigated another supply zone. Okay, so there's a little bit of subjectivity and discretion with this, and it will depend on the scenario whether you're happy to leave your order there or not. But generally, these are the two scenarios for the most part when I will cancel a resting entry order, a resting limit order. Okay, so you get your medium time frame mitigation, price comes in, and let's just say you get your entry model. Okay, and then when price is up here, you set your entry order down here. Now, if price pulls back, and again, this is still your lower time frame execution time frame, right? If price pulls back, you kind of want to see quite a significant pullback, not really like maybe one or two candles like a fractal pullback, kind of more that sort of true sort of swing / internal pullback, like a clear shift in structure. If price comes up again, then at this point, even here, price would have to break that low to come back to your entry. Especially if you get like another break, right? Price is gonna have to break significant structure to get back. So again, what is significant? Little bit subjective here, and it kind of as well, it can depend on kind of how far price has gone, and the overall setup, etc., whether or not it makes sense. But for the most part, if you kind of see like a clear swing in price and price has to come back, you may want to consider cancelling your order. But again, it's going to depend on how much like the overall setup, where we are, how far has price moved, because sometimes it can just be like a clear movement up to like tag you in and go. So there's no perfect answer I can give you, but you will get a feel for it over time, right? If it's kind of clear and obvious, if like if you're trading on the M1 and you see like clear M1 swings and price has to break it, you might not want to cancel this, because eventually you essentially could then view this as a risk entry. Because at this point, when you set your order here, you're basically paying the confirmation entry. But if price then has to like break all the structure to come back, it's kind of like a risk entry again. So you may want to leave your order on, okay? Because sometimes it will come in and just go, right? It's fine. It's more just like an M5 break, and we continue like that. Other times you might want to cancel it and just wait to see if this low holds, right? And then you can basically play the confirmation entry off this level again, right? It's going to be down to you. But this is one sort of scenario to consider. The other scenario to consider is when you set your order, you're not tagged in, and then your medium time frame basically mitigates, whether it's a POI or it breaks some structure. Basically the medium time frame idea has changed. So this is probably kind of the one of the more obvious scenarios. Again, if I can simplify this would literally be, let's say you're entering on the M1, but you don't get tagged in, and then price is mitigated in 15 supply. You're not really going to want to get long anymore. But let's be a bit more specific about that. So your medium time frame is bearish. We come down into your medium time frame POI. Now, if the medium time frame order flow is bearish and price is coming off your medium time frame demand, what's the expectation of price? Well, your primary expectation should be that it's just a reaction point to facilitate your medium time frame pullback to your medium time frame supply. So, i.e., if you're an M15 trader, right, and price mitigates your 4-hour POI, but 4-hour order flow is bearish, right? Then if you're looking to get long, what is the 4-hour idea you're playing? You're playing a 4-hour pullback into 4-hour supply. So if price mitigates your 4-hour POI, and then you get your M15 lower time frame entry model and you set your order, but price doesn't tag you in, and then the 4-hour chart pulls back up to here to 4-hour supply, cancel your order, because now price is coming down. What's going on? You're trading from a weak low against order flow. This movement that you were trying to play, that was the idea. This was the trade idea. You're playing the pullback. That's already completed. The objective's completed. It's now mitigated this level. You're now leaving your limit order on a weak low. 9 times out of 10, you're going to take a loss there. Okay, so you want to get tagged in basically here. And if you don't, and price reaches here, the trade idea is done. The objective is complete. Cancel your order. So kind of hopefully, that makes sense. That's what I mean here, right? Your medium time frame POI mitigation. You see that structure shift. So ideally, it would be nice if you got like a medium time frame chalk, or just even if it's just your low time frame entry model, you don't get tagged in. You were playing that medium time frame pullback. It hasn't occurred. You've mitigated a key level, or even just pulled up to the range. Does it make sense now to leave your order here? No. Okay. And then this is ideally where you want to be looking for, to get shorts, right, and continue that movement to the downside. So when could it make sense, right? Because on paper, if you write cancel order when medium time frame POIs hit, that doesn't always make sense, because let's say you're trading here, and let's say price is at this point on your medium time frame, okay, and let's say for whatever reason you want to set a risk entry here. If price comes down and mitigates this level, do you want to cancel that risk entry? Well, not necessarily, because the reaction from this demand, if order flow is bearish, we assume it's just to facilitate the pullback, right? When order flow is bearish, demand just facilitates reaction points for pullbacks. Okay, so on paper, if you set your risk entry here, right, because you want to follow order flow, and then prices hit your medium time frame POI, you could think, well, now I should cancel my order. Well, maybe, but our expectation is that it's just going to come back here anyway to tag you in, to generate liquidity down here to target those weak lows. So that's an instance in which it can make sense to keep a entry order on after a medium time frame POI mitigation. Okay. So yeah, that's it really. I can't make it too much more mechanical than that for now. I think that should be enough to really help you out with deciding, but this is one of those elements of trading that will come with time and experience, but I think these are two very clear mechanical and good reasons to consider cancelling